In each case, we go for district scale, 100% ownership that would interest a major. We add a lot of value, multiples, and then hand it off to somebody who actually builds a mine.
Given you've not demonstrated since 2007 the ability to monetize it, my question to you is, what's the strategy you need to employ to make this work? Do you know what you're doing? Are you going to be able to bring money in? How do you move it from an overhead and a liability into actually something valuable? Otherwise, it's just land. Hello and welcome to Crux Investor. First of all, thanks so much for watching this video. If you like it, do give us a thumbs up and also leave your comments below. It helps us understand the sorts of questions you'd like us to be asking the company, what you think of our performance, and indeed what you think of the company's performance. And if you haven't already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. And of course, for more videos like this, click the notification bell. And don't forget, you can get our videos in podcast form. You can get transcriptions and articles on cruxinvestor.com. And if you're a Crux Club member, you can get access to the videos 24 hours before everyone else as part of our early access program. We spoke earlier today to Michael Rowley, CEO of Group 10 Metals, their TSX-V listed company. They've got two assets in Canada, both polymetallic, and another Stillwater in the US of A, also polymetallic. The Canadian assets have not been able to be monetized. They've done some work on them, spent a lot of money, but there's no interest. Michael talks about the market and timing being against them. So right now, he says they've got no value on the books and certainly don't contribute anything towards the 30 million market cap. However, at some point he hopes to monetize those. Let's focus on Stillwater. Stillwater, huge land bank, polymetallic. As I said, we asked him what they're going to be able to do with $3 million. He talks about some money that they may be able to get a hold of through options, about maybe another $7 million. We talk about the types of things that they're going to do to try and drive some interest from majors, which he says are circling him. We discuss a few other topics. Do take a look at the description below at those, because we cover quite a few things, because we're interested in exploration companies at this stage. So if you click on the timestamp, that's will leap you to that part of the video. Enjoy what Michael has to say. Hey Michael, how are you doing, sir?
Thank you. Glad to be here. Good to see you.
Good, yep, thanks for joining us. Another news story for me and the viewers and subscribers to Crux Investor. So thanks very much for coming on. Can we kick off with the 1 minute overview of the company and then we'll pick it up from there?
Yeah, Group 10 is a pre-resource growth stage exploration company. We have 100% interests and in fact, generally 100% ownership in 3 district scale assets. And the flagship, of course, and the focus of our conversation today is Stillwater West asset in Montana. So we're in the highest grade palladium platinum district in the world, and we had joined the largest mines of their type outside of South Africa and Russia. And we're the first to systematically go after the Platte Reef model there, which we can get into in our conversation. The key point is that we have mineralized zones there that we're now advancing towards our maiden resources on that property. We also have in Ontario a high-grade gold project that adjoins Treasury and First Mining's Golden project, and that was in the news yesterday. We can touch on that. And in the Yukon, we have the Kluane PGE-nickel-copper project that adjoins one of the largest undeveloped deposits of its type.
Okay, brilliant. Great summary. Thanks for that. We will start off trying to understand what the original business plan was. So how long have you been going, or how long have you been involved with this project, and how long has Group 10 been at what it is today? If you could describe the business model, has it changed, had to change, and what are you trying to work to?
Sure. Well, I co-founded the company in 2007, and I've been with it since day one. In 2012, we started acquiring the ground in Ontario, and we consolidated a district there, and that, of course, is in bear market conditions. 2015, we turned our attention to the Yukon and to the nickel-copper PGE space, so magmatic rocks, and we built a district-scale position there. In 2017, this spectacular opportunity came along in the Stillwater complex. And we couldn't turn that down, and that has become our flagship based on the database and our drill results last year in the complex. So the business plan here is the value add. In each case, district scale project, terrific database, add the right people, and de-risk it, add value. And certainly at Stillwater, in all those projects, particularly Stillwater, we see the potential to add a lot of value quickly.
Okay, so you've got a lot of moving parts there. You're 30 million Canadian market cap. You've got, looking at your latest presentation, about $3 million. How do you work out what to focus on? Because you can't do everything with $3 million or 30 million market cap.
Well, two-part answer. First is that there's a lot of value in those non-core assets that as the market turns here, we're getting increasing expressions of interest in particularly Black Lake Drayton, given the news yesterday that Treasury and First Mining are going to bring Goldland and Goliath together, our neighbors, also in the Kluane. But the key point really is the focus on Stillwater and debut those resources there, the three big ones at the three most advanced target areas where we have past drilling plus our drilling last year that'll give us a quick leg up. Then we can get into the broader 25-kilometer package and go after some of the earlier stage targets.
Okay. Why haven't you monetized some of the kind of non-core, non-focus assets already? Because it's surely that would be a nice, quick way to actually allow you to finance what you're focusing on, or you want to focus on.
The appetite generally hasn't been there. It's only increased in the past 2 years and certainly in the past 6 months. In the bear market cycle, these mineral claims are liabilities to bigger companies, and they drop them. It costs money to hold them. They focus on their dividends and keeping their shareholders happy and producing. And this ground is dropped, and that's how Stillwater came available. That's how all these assets came available. It costs money to hold them and advance them through the bear market, and then suddenly everybody wants them, and everybody wants to join the mining party, and these things are worth multiples of what they were in the bear market, and that's what we're about. So those non-core assets are now getting a lot of attention, particularly Ontario, and we're finally getting interest that is in the right order of magnitude. We're also at a point where we own them 100%, and it doesn't cost us a lot to hold them. So we'll do the right deals at the right time on the Canadian assets and focus on Stillwater.
Okay, so do you think your model has changed? I mean, obviously, you didn't really start acquiring stuff until 2012. Been around since 2007, but 2012 started acquiring. The idea, I guess, is not just a case of land banking, but land banking and adding value. Do you feel you've been able to add value to those assets, and it really is just down to the market, or have you not been able to find what you thought you might be able to find with that strategy?
No, we've been careful with each acquisition. I go into districts, the team goes into districts with a lot of care and strategy. In each case, we go for district scale, 100% ownership that would interest a major, and that is ultimately the payday, right? We add a lot of value, multiples, and then hand it off to somebody who actually builds a mine. It might be a major. In the case of Ontario, it might be our neighbors. But that's what the junior space does. We de-risk and add value. It has worked in each of those cases. All those assets are worth much more than they were fragmented. And then also us bringing together a database, doing intelligent ground programs, strategic where necessary, but adding value.
Well, you're adding value on paper, but you haven't been able to monetize it, and it can't just be down to the market. So what else do you need to do? How much more money do you need to spend, and what else do you need to do on those land packages to get them in a state which you think will be market ready, i.e. something that people will want to get into a data room and talk about?
We did monetize the first asset. Our listing asset was a past producing mine in BC, and we sold that off to a group that is working towards production. We did receive a royalty payment, and we are owed additional royalty payments per that deal. They have been slow coming due to the bear market. So the model does work, and it's worked elsewhere. In terms of what we've done, we've taken holdings that were fragmented and added value just by bringing them together. But then our work compiling the database and taking a more regional look at the geology and identifying the drill targets and where the value is and where the possible deposits are. That's really the key in that regard. Frankly, the properties would appreciate on their own if we did nothing. But our objective is to aim much higher. At Stillwater in particular, tens of millions of dollars of data came in with the project, and we compiled that. And then we added 12,000 meters of physical core that we were able to reunite with the project. And then we bring in this thinking from South Africa, this Platte Reef model that had never been systematically gone after in Stillwater. And that's what's attracted the majors to us, is that size potential.
When you say attracted the majors to you, in what way?
If you'd been at our core shack in 2019 in Vancouver, you would have seen basically every major that's relevant to the space. We got attention just for having the Stillwater name and having core on display. This year in 2020, also in Vancouver, we were able to display our own core that we drilled ourselves at 2 of the most advanced target areas. And that got further attention. So this Stillwater has the potential for the kind of scale they're looking for. They've been clear that they cannot find a multi-decade potential mine life in a jurisdiction that they like. There's a very short list of possible projects.
Beautiful. Do you mind if we come back to that? Because that's the kind of like the focus. I think that's the potentially your golden goose. But I want to be able to address some of the other things and park those up for now. So if I look at that first asset, which you then I presumably farmed out or someone earned into, you said that you got a royalty on that and they owe you some money. So how much money are we talking about, first of all? Are you still owed on that first project?
Nothing is owed because the next payments are tied to them getting an underground mining permit, and they have not done that.
Okay, so
they are working on it. They have been working on it for a while. That's all disclosed in our financials.
Got it.
And we do have a back-in right there as well. So that really has been a victim of the markets, I think. It's a good project.
Okay, so there's no cash imminent there. And so tell me, what's the company standing? Are they reasonably cashed up themselves, or is this another junior hoping to find pay dirt?
Frankly, they're not even a junior yet. They're a private group. They're credible, but they have not got their listing yet.
Right, okay.
So, I'm not really counting on that, and I'm not suggesting to shareholders that that's forthcoming. Great,
thank you. Thanks. That's where I was going with that one. And then, so if you look at that model, is that because of the way that worked out, is that a model that you would hope to replicate with everything except for Stillwater?
Well, I think we could do a lot better in the Yukon and in Ontario. The targets are much larger, district scale, and they've already attracted the attention of majors in all 3 projects. So that's the magic of going bigger than we did in BC.
Right, but tell me what that means. So everyone tells me the majors are attracted. The major, they're talking to us. We're having conversations, but that doesn't convert into cash, or it doesn't convert into earnings or deals or buyouts or whatever. So what do you need to do with each of those to actually move those conversations from interested to monetizing or creating some sort of accretive value for your shareholders?
Right. Well, in each case, it is consolidate that land position, then consolidate the database and get some good minds around it, probably some new thinking, and unlock the value. And do that in an improving market. The market's been against us for the past 5 or 8 years. It has not been the time to do big programs. Really, that effort would have been wasted to a considerable degree. It's the time to consolidate good positions and do smart programs that pave the way and present the targets, prove up targets.
Okay.
And potential.
I don't know what it means. Tell me what it means, because I'm intrigued at the way the companies think about how they go about trying to create value for something. Because normally, if something isn't working somewhere, you talked about new thinking, they would park them up, flip them, and move on. And you sort of have done with Stillwater, but you're talking the language of still wanting to create some value there. But that's going to take time and money. Is that time and money happening now as we speak, or are you parking them up and you'll come back to them?
Yeah, on the Canadian assets, much less spend. It's not our focus. Our focus very much is just add enough value, show the way, and move them out the door at a nice profit, at a good return to shareholders. Stillwater's a different animal. We have half of a fabulous district, terrific database, and we're bringing in this new thinking from South Africa. So that makes a good example. In the past, the ground was held by Stillwater Mining. Actually, before that, Amex, and they did very good work drilling for nickel and copper in the 60s and 70s. They didn't find the 1% nickel they were looking for. They found sort of 0.4, 0.3 nickel, but that's Platte Reef grade nickel. They didn't assay for PGEs generally, in fact, very sporadically. So we're the first to sort of bring all that together and look at this new model. In the 90s, that ground is owned by Stillwater, and they were focused on the JM Reef and production. They dropped it when staking laws changed in 94. In late 90s, the juniors picked it up, and in fact, key members of my team worked with those juniors, and they did some good work, but ultimately the ground was fragmented, they had different focuses, and they operated within what they could raise on any given year. So they added a lot of value to the database. In fact, they did the kind of airborne geophysical survey. You asked earlier what adds value. geophysics is a fabulous thing to do. You see through the rocks across tens of kilometers, and you can really start to map targets. And that's a key value add for any junior.
Okay.
They did work like that, but ultimately they chased reef type targets and ran out of gas. There was a bankruptcy, and the vendor, our vendor, who was their geophysicist actually, staked the best parts of the ground in 2013 and set about looking for a partner, and thankfully found us. So we then added an enormous amount of claims around it. We staked and announced in 2017, I think 280 claims, 282, and promptly doubled that over the next 6 months and year as we got into the data. So we keep finding more and more at Stillwater.
Beautiful. And I promise you, I do want to talk about it in great detail, but I need to park up the Canadian stuff from what you said, okay? Because we need to, let's get these out of the way, because I want people to understand where you focus, because you do talk about the Canadian assets, right? So you've just said to me, you know, we're not going to spend anything, we're not going to talk about it, but you do talk about it in here. So let's cover it and move on. So you're not going to spend any money or the time right now, because your focus is within Stillwater, which I understand. But what do you think it's going to take for someone to knock at your door and say, hey, can we have a look at this? How much more money are you going to need to spend, whether it be now or later, to get it in a condition, and therefore perhaps a valuation where you're going to be able to create some value for this? But so let me ask you, how much value of your 30 million market cap do you attribute to your Canadian assets today?
I don't think we're getting any recognition significant.
Got it.
Possibly a small amount for Ontario. To answer your question, we've done a good job in the past few years compiling the database and paving the way for targets. We've got interest in both assets, Kluane and Ontario. Really, we could spend nothing more on either one. Okay. They do have claim maintenance requirements. You know, actually, they're paid up very nicely in the Yukon right now. In Ontario, that's maybe $200,000 a year. It's not much.
Right. So that's understood.
You will see modest programs at both projects this year.
But nothing meaningful. Nothing meaningful, because the market. You're saying to me, market conditions say that there's no point right now. We just need to focus on the money we have today, on what we think is going to unleash the biggest value for shareholders, and that's Stillwater, right? So I think, that's dealt with it. So we're going to park those up. We're attributing no value. We're not really attributing much cash spend or requirement on the Canadian assets. We're going to focus on the US of A. So let's get into it. So it is highly prospective. You've got a lot of data. You've added to that data. So let's talk about what you think is in the. Sorry, not what you think. What do you know about what's under the ground today? And then what's the plans with the $3 million that you've got?
Right. Well, the focus has to be on the 5 most advanced areas at Stillwater. It's a huge and prospective project. It's all mineralized. Our key is to find the portions tens to hundreds of meters thick that are really economic, and we're doing that. And it's there. We proved that last year. So the key is to focus on those 5 most drilled zones where we have drill-defined mineralization. And we've listed those in our presentation. Of those, 3 of those are the most advanced, and those are the ones we're working to advance to resources this year. And that'll be a key milestone for the company, revaluing around those resources. The 4th one on that list, I think, just moved up in priority given the news on Friday last week. The Pine high-grade gold zone. We have a new understanding there, and that opens up the gold potential of the Stillwater complex very nicely. And this is very new stuff. It ties into a high-grade gold occurrence that we've identified 9 kilometers away on the HGR in the magmatic rocks. So that's quite a breakthrough for us. The high-grade gold is now not only in that shear zone. It's not limited to that. We've got a new understanding of the genesis of that and possible occurrences. We also have a suite of minerals that go with it that help us identify that and will help us target it. So Pine has moved up the priority list. Okay. Sorry, that's a long answer. But
no, I don't mind. I love the detail. So what you've got there, you've got again, big land bank. It's polymetallic. You're going after a lot of different mineralizations. You've spotted some anomalies, and but you've still got $3 million. Okay, so again, given the size, this for most people would be a company, right? Let alone everything else you've got in your portfolio. So, how do you focus your time and your money with what you know today? Because again, you talked about 4 targets there, which is a lot. So what are you going to do?
Revalue the company around those resources. That would be a key milestone. Raise money at higher prices, do bigger programs. We see a lot of value that we can add at Stillwater this year, next year, following year, as we build it out and expand it. Once we've established those resources at those 3 primary areas, there are conductive highs beside them that are untested, that we know are carrying mineralization. So, expand from there. At some point, bring a bigger partner in.
Okay.
But we'll do that at the right time.
Okay, now we're getting to it. Okay, so polymetallic, limited budget, you've been at it some time, you've had some other projects which you've not kind of got over the line. Okay, we talked about one which you've got a royalty on, etc., but you haven't got things over the line. So do you think that the market is nervous about your team's ability to get Stillwater over the line? Do you know what you're doing? Are you going to be able to bring money in?
We definitely could bring money in. We have $4.7 million in warrants that are in the money right now, and that would add substantially to this year's budget.
Okay.
And part of what we're doing internally right now, deciding on finalizing our plans for the year, is seeing the rate at which those come in. So that and a number of big conversations we have underway will inform what we announce in the next month or 2.
Okay, so that's the money. Do you know what you're doing? What are you going to do next with the money you've got and the money potentially that's coming in? How do you get this to a point where you can show the market you are creating value which can be monetized, so you can get a strategic partner in, so you can move something along?
Well, we've already got their interest. So it's a question of I think, frankly, we could do a deal basically anytime. It's a question of what deal. We see a lot of value that we can add first. With this database that we've got and the fact that we're permitted now on 50 sites for 5 years, the stage is set to really go after this. Last year we operated from previous drill pads and using past drill core. So even the fresh core was drilled from past sites. This year we're wide open to go after that Platte Reef model and those conductive highs that are untested. So there's a lot to be done here, even at those most advanced areas, before we get into the newer areas. And we see a way to do that.
Okay.
With the money we have, we can deliver on our key objectives for this year, no matter what.
Okay, so run through the key objectives for me, please.
Well, delivering those resources.
Okay.
Revaluing the company around our maiden resources. From there, it's just how much exploration do we do in the field, and we're finalizing that right now, and we look forward to announcing that in the coming weeks.
Okay, and so do you feel that that's a narrow enough focus for you, or again, because there's a lot of land bank, there's a lot of moving parts still there. So do you think as a team you've got the ability to kind of focus in on it? Like, so if you run me through the team, who here has done it before? Who has created value before by doing something similar?
Yeah, well, that's a very good. I should have gone there in the first place. Greg Johnson, chair. He took Nova Gold from 10 cents a share to 2 billion market cap. Our chief geologist, Dr. Craig Bowe, was underground at Stillwater in the 80s and has since been to Bushveld and Finland and all these other great magmatic occurrences, similar systems. We're glad to bring him back to Stillwater. Dr. David Broughton of Ivanhoe joined our team in 2018, and that was a huge stamp of validation. And to get his insight, he's of course credited as co-discovering the Flat Reef for Ivanhoe in South Africa. So that brought a terrific cross-pollination and insight to our work. And then we've brought in 3 members of the teams, the juniors that did the work, gave us a lot of our database, including the QP. So that core that we have is not historic. We have the core, we have the QP. And the vendor, Justin Modrew, is one of those as well. So we've got that. We've built a truly world-class team around this with terrific history at Stillwater, literally decades, and then with experience from Bushveld and other districts that we're drawing parallels to.
Okay, there's a lot of names. There's some really big names. You just mentioned a few of them. Who's actually active and who's just at the end of a phone for some advice?
The entire Montana team, including Craig, I talk to at least weekly. In fact, more often, several times a week. And Greg and I talk daily.
Right.
It's a very active team. We're very engaged, and Stillwater is very much the focus.
Okay. How much does the management hold in terms of percentage of the company?
29%.
That's meaningful.
Yeah. No, it's the way it should be. We wrote checks for those shares. And the institutional ownership is now 20% and climbing. We've seen that grow nicely in the past few years. And the balance of that is between retail and high net worth, some funds. They're under institutional. High net worth in Europe and Canada and Australia and America.
And has that been a sort of growing institutional number, or have people dropped out along the way?
No, it's growing very nicely. Yeah, we just added Sprott Asset and some other funds out of Toronto last year, US Global before that, off the top of my head. It's been good to see. And it reflects the strategic approach that we're taking and the quality of the assets in the team.
Okay. And obviously you had a bit of a dip like everyone else. You were going places last year, bit of a dip in March like everyone.
We followed the palladium price there and
Yeah.
up and then down, but we've regained nicely, and sitting as we are today at 26 and a half cents. All those warrants are in the money, and shareholders are engaged and excited. I get a lot of positive feedback, good questions from email and various channels.
Like what?
It's been fun, frankly. Exactly the questions you're asking.
Really? That's disturbing.
Generally, the question is how is this possible that a junior came to own half of this district, and that your neighbor was bought for 2.2 billion US? And it's
that's not quite my question.
It's a story of opportunity.
That's not quite my question. My question has been, I know what you've got because it's all over your presentation. It's vast. You're talking about the district-wide thing. What my question is, given you've not demonstrated since 2007 the ability to monetize it, my question to you is, what's the strategy you need to employ to make this work? To not have to do comparisons to your neighbor who is multiples more valuable than you. What are you going to do to ensure that you're like your neighbor? You don't have to do the comparison because you've actually gone through the steps and shown the market that you've got the ability to go through the steps because you know what you're doing. That's what I've been trying to get at. So it's slightly different. Having it is a liability. I think you said it earlier as well. It's just an overhead, right? How do you move it from an overhead and a liability into actually something valuable? Otherwise, it's just land.
Yeah, well, you show that potential, and the market has to be willing to pay for that potential, and that has not been there for the past 5 or 8 years. These claims are being dropped generally until perhaps 2018. The phone started to ring again finally. 2015, I'm phoning people and trying to interest them in my projects, and they're saying, gosh, that looks good, but we're not writing any checks for that. Now suddenly the generalists are coming back to the space. I toured through Florida late last year. A lot of real estate money came out to hear me present, and they don't understand mining, and they need to be educated. That's excellent. That's what we want to do. We explain to them how this works and where the value add is, and that's what we want to see. That's happening now. It's only accelerated. A lot of money coming back into the space, and much greater interest in assets like these. So companies, Group 10, and also my sibling companies in the metallic group, we do that same approach across all 3 companies. That will pay off. Even if we did nothing to explore the ground, just consolidating the position and having 100% interest is significant. The mining game has been likened to having a party in a room by yourself, and you're hearing the bigger party going on in the room beside you. And then very suddenly everybody wants to join your party, and the doorway is only so big. So we've clearly come off bottom now. Gold is leading the way, silver, platinum are following. And I think we're at the beginning of a spectacular bull run here. And the appetite for these projects will go up accordingly.
Potentially. We are on a gold run, but potentially they'll go up.
That was forward-looking.
That was a bit forward-looking, but it kind of brings on to the rub of this, right? It's a polymetallic. Polymetallics, basically, by definition, there's lots of different mineralization. You've got to work out the focus of what you're able to economically get out of the ground into hopefully a positive market, right? And what's your sense of the time frame with which you're going to be able to start giving some clues as to the economics? Because it's not just about hitting mineralization or the occasional high grade. It's about being able to do it in a meaningful way where you can start to intimate or get a sense of the economics around this thing. So that's always been the rub, hasn't it, with I think polymetallic type situations. So what's your sense of the time frame in which you're going to sort of drive towards that point?
Well, again, we're blessed with the database, and it's not a greenfields project in the middle of nowhere. 3 operating mines next door and terrific data. So that includes some really good metallurgical work by AMAX in particular in the 1970s. They did a couple of waves of met testing at the camp zone, one of our 3 primary areas. And the stuff floats nicely. The nickel and copper report, the PGM, they were able to make a saleable, preliminary terms, saleable PGE concentrate using the flotation technology of the day. All preliminary, but very good indications that the nickel is in the right place, the PGEs are recoverable, and that this could process fine in conventional methods. So that's a terrific starting point. When we report our drill results, we always apply a virtual mining exercise to that. So you see it in our presentation of the Iron Mountain, the Chrome Mountain results. We're always doing cutoff grades. So we apply in the Iron Mountain ones, for example, 0.5 gram platinum equivalent cutoff to get those long intervals. And then we go to a 1.5 gram to show what a more selective mining scenario might look like. And this is all very early stage arm waving stuff, but you're absolutely right. You need to shine a light down those pathways and just make sure there's no large obstacles there. Yeah. We're doing that. And to have somebody mining just a couple of 100 meters to the north of you already is even better in the same geologic system.
It's good, but let's not go to neurology. Let's come back to the question, which is, what do you think the time frame is when you're going to be able to talk to people about what you know, not what I say, no arm waving, just what do you know? So are you mapping out the next 12 months, then 18? When do you start coming to the market with something around being able to identify this sort of scale of what you're looking at here?
Well, we'll get those starting resources out first, and that would be this year. We've committed. We expect to do that within 2020, and that seems reasonable from everything we know right now. We'll also summarize that past metallurgical work in an upcoming news release. I think that's important. Anybody who's knowledgeable to space asks those questions. Nickel, PGMs, that's one of the core concerns. And we have this data to stand on. Beyond that, it's expand the resources and get into these new target areas. And the fact that the soil anomalies and the geophysics that we're seeing in these new areas correspond directly to these advanced areas, we know that these are very likely running with good mineralization. That becomes a question of focus and how quickly you can grow this out. And that comes back to starting with those known mineralized, drill-defined mineralization. We have now 210 holes in the database, over 30,000 meters of data, and nearly 14,000 meters of physical core. So there's a good amount for us to build on in terms of getting that initial valuation and then growing from there.
Great. Do you run a tight ship? How do you pay your people? Are they mainly options, warrants? Is that the way forward?
Salary, but contract. We basically have no employees. That's typical for a junior. We share an office. In fact, there's a total of 4 companies in our office. 3 of them are the metallic group companies, Metallic Minerals and Granite Creek Copper. and us. So terrific cost savings there. The geologists are all contract. The Montana team thankfully lives in Red Lodge generally, and certainly in the US, so that's helped us in these recent times. We were able to continue full steam basically through the past few months. And yes, all contract.
Okay.
With option incentives for upside and to reduce wages.
Okay. What's your passing word to existing or long-suffering shareholders? More to come?
Yeah, we're blessed with a lot of news flow, and you'll see that continue to roll out. I think we owe the market an update on our Ontario asset in light of the news just yesterday about Goldland and Goliath getting together. These are our neighbors, more than 3 million ounces in the district. We need to remind people that we have the 30 kilometers of strike, 127 holes in the database that have joined them, all in the same system. So we'll get that out. Montana, yeah, news still to flow, and news still to come on Stillwater. Our plans for the year, we have some rhodium results that are quite fun. Not many people can talk about a rhodium component in their suite, and some other things we're working on as well that I think will be a surprise.
Okay, well, let's save that for next time. Thank you so much, Michael. That was fantastic run through, new to us. You got a lot on your plate there. I look forward to hearing from you if there's something happening. Pick up the phone, give us a call, let us know what's going on.
Okay, thank you so much.